Alright, hey guys, so today I'm going to be looking at the New Zealand dollar US dollar pair, starting off with the daily chart here. So if we're looking back here at the price, what's happened within the past couple of months since the start of 2019 and even into December of last year and November of last year, price has kind of been trading in this range right here, if you can see that. So I'm looking right now on the daily chart. You see that price is starting to come down to the bottom of the range here. And is there any sort of trend lines that you can draw? You always have to think about that. I'm seeing a trend line right here from the bottom, the low here in October of last year, connected here to this, and then so yeah, there's this trend line here. Price reached here and then it came up, tested the trend line again with a very large pin bar. Price then went up again and it came down, another pin bar, and then now price is coming down and touching the trend line, or sorry, testing the trend line again for the fourth time, as well as it kind of being in the bottom of the range that the pair has been trading in for the past couple of months. So as always, you got to go in to the lower time frames to get a clear picture of things. So I'm going to go into the 4-hour time frame here, so you can see that prices kind of touched the range, bottom of the range, broke through the trend line a little bit, and then price immediately respected the trend line and bounced back up. So it's still not too late to go long. If I had to choose a position here, I would go long. And you can wait for a retest of the trend line here, and then price might go back up. Or you could just enter long now. A famous quote that I read was that if you're long, or if you're bullish or if you're bearish, just get in and don't worry about it. If you have very strong feelings towards the trade, just get in right away. Obviously you can still think about your entries, all that, on the 5-minute, on the 30-minute, on the 1 hour, depending on how you like to trade. But in terms of this trade, I would definitely go for a long position, and I would put my stop loss around just below this pin bar here. And that's when I know for sure that I'm most likely going to be wrong, because price could still come down here, right? Could move like this, come down here, and then eventually go back up. You don't know. So however, if you are trying to go for a more risky trade, which by all means, if you want to put your stop loss at the bottom of the range, you see here, that's kind of like the low. This was kind of an anomaly on the trend line. But if you really wanted to put your stop loss, you could also put your stop loss here. That would be a bigger reward to risk ratio. But at the same time, it now takes less pips for the price to reach your stop loss. So you really have to decide what you want to do in terms of your risks. It's the same risk overall in terms of your position. Your position size is going to be different depending on your stop loss. But there's a higher likely chance that your stop loss gets hit on the higher stop loss here. So in terms of take profit, obviously try to take your profit at the top of the range, just below the top of the range, probably somewhere around here actually, yeah. And then so something that I've been experiencing for the first couple of weeks that I've been trading is whether or not to move your stop loss once your trade goes into profit. If your trade starts to move 50, 100 pips up, do you move your stop loss to break even? Now there's two scenarios that can happen, or a couple scenarios that can happen if you do that. And one is that once you move your stop loss to break even, price eventually retraces, hits your stop loss, and then you get stopped out, and then price goes in the direction that you wanted to originally, and you could have made some money off of that, but you got stopped out early because you moved your stop loss. Now the other side of the thing is that if you move your stop loss, if you don't move your stop loss and your trade goes into profit, and then it's in profit, but then you get too greedy, you don't take profits, or you didn't take some on the way up, and then price retraces, hit your stop loss, you're out 1% of your account because you were too greedy to take profits. Now that is also something that obviously is undesirable. So I think it really depends on the trade, how you manage the trade, and I think it just comes with experience with the charts over time, knowing how to move your stop loss, knowing when to take profits on the way up. Obviously, you know, a lot of people like to take profit 1, take profit 2, and then, once they reach, the take profit 2, move your stop loss to break even, and at that point you've already, halved or sold 2/3 of your position size. So at least you've secured some profit if the final position or if the final third of your position gets stopped out. But yeah, this is the analysis for this week for the New Zealand dollar to the US dollar. I will definitely be coming out with more analysis this week, so stay tuned. And, just wishing everyone good luck. And, kill it on the charts.